Hello guys, glad to have you on board again. Today we're gonna do as usual. I know it's kind of boring, but that's how trading actually is, repeating the same old stuff each and every day, each and every week. If you thought trading was something full of excitement and things like that, it definitely isn't. And I hope you'll figure that someday. But anyway, let's get straight to the point. I've been terminating the French version of the PDF manual. It's a big one, a lot more complex than I thought it would be in the first place. But this is definitely for the best, as I think that's really a great thing I've been doing in here. But I'm gonna ask you guys to help me out at some point, because as you know, it's been lasting for almost a month since I started this thing. I pretty much exhausted myself in the process, having the baby boy to take care of. He's been sick, basically have been sleeping 6 hours a day to manage finishing this thing ASAP. And handle the promises I made. But the thing is that regarding the extended delays it's been taking to finish this thing, now you need to know that I'm needing to translate that in English. And the thing is that I don't necessarily have that time, as I would pretty much like to focus on recording new videos, updating the website ASAP to get it finished by the end of that month. So I'm gonna ask you guys, you know, I'm kind of doing anything I can to help you. I'm doing this for free. Meaning the daily videos, they're published for free. Everybody can look at that. No one pays for that. The PDF manual as well is going to be entirely free, and I've damn put in myself 4 weeks of hard work to put this all together. So I would really appreciate if just some of you guys could help me out in here just by the English translation. So I'm just obviously saying this to those who speak French and who think they can be able to translate this thing. I don't necessarily need you to be able to talk French, but those who are able to translate French to English with a decent amount of skill. I don't want an average translation. I want something that can be done properly. But if some of you guys could just help me out there, I would really appreciate. I'm not going to pay you for this, but you know how you know the mindset I'm always into, which means I'm not going to let you down. If you help me out, obviously I'll come up to you with some sort of reward. But I just want this to be considered as a necessity, but be aware that obviously if you help me out, I'll help you out as well. So now, that being said, I hope some of you guys will help me. I've been sending the same message to the French users as well. So I hope some people will be able to help me. And obviously, when they will have translated this thing, I'll be happy to share it and go public with it. In between, obviously, just the French guys will have it, and I'll focus myself updating some videos and the website in between. And that's it. So now back to the market, and starting as usual with the cryptocurrencies. Definitely something great's been happening last week after those dead man standing days we had one after each other. It's basically we've come out of dead body moving, but not necessarily the best way we could have done. So it was absolutely necessary for us to close at the highs of that week, which we've been doing, and that's a positive sign. I wanted this market to close at the high of the candle, and definitely that's what we've done. So pretty nice weekly candle. The thing is that in order to have the best possible candle close, it would have been better if we just didn't break down the previous week's low, which we did. It didn't last very long, to be honest, so we'd just gone there for stupid guys to trade and trigger stop losses. So obviously now we've got the strong bullish reactivation. We've clearly fucked up the bullish engulfing, and definitely got something. Now this close is here. This candle is not going to change, and that's definitely a positive sign. So I was clear that we had early signs of bullishness reactivation. Okay, these bullish signals really shifted the odds in the bullish favor. But we still needed to have a price confirmation. Price confirmation that we now have, I was clear, we needed to make a candle close on top of $114. And I said we need to confirm this by a weekly candle close. I mean, it's just a step-by-step process. All the processes are checked, so definitely we've got a positive bias. Does that mean this is a won battle? We won the war? Obviously not. We just won a battle in here, and we'll have to focus ourselves on heading to the next step and winning those next battles. We now have a positive bias in terms of momentum. So the bulls have prices, the bulls have momentum, the bulls have technicals. So we've got all the statistical advantage we could get to. So we need to see prices moving accordingly. So it doesn't mean it has to happen just today or tomorrow. Don't be overexcited. Don't be in a rush. Just be aware that now that we have this, okay, we can truly confirm this as being a bottom. We clearly built a support area in here until further notice. So this is the trend channel we'll build. Okay, we'll obviously fuck this one up because I don't think we're nearly going to find a resistance in here, but we still need to be aware that this is possible. So in between, I think getting in there is going to be broken up, but this is definitely what we could forecast. I think we can do just this, okay, so be aware of that. We have areas of interest in there. I think this support, this resistance definitely I think is going to be broken. Probably just short term because I think we can just make it upper shadows in here, ranging for a bit, consolidating, building another support before having the final wave 5 extension. Classical vertical move, FOMO trading, you know about that. For now, don't target more than this level, which is a very important level, which is basically the first 23.6 retracement. Let me just put that in perspective in the weekly charts. Okay, all right, here we go. God damn it. No, it's a 14.6 retracement. I thought I built this fucking one on the chart, so we're just going to do it all over again. So let's just put that in perspective. Market bottom to top. Okay, so right in here, and I would like to have the damn 14.6. I thought I've done that. I don't know what the fuck happened. So 14.6, which is the underlying, the in-between Fibonacci retracement before the 23.6. Yes, all right, definitely here is what I'm talking about. Okay, 14.6 is the first retracement level, and it's showing us $280 as a perspective to the bull side. So definitely highlighting this big area, this big cluster in here, let's say $260 to $280, where you profit take, obviously, for the speculative trades, and then you let go for a couple months for God knows how long. But I still tend to believe that we're going to have a long digestion in between. Funny thing, just to assess in terms of technicals, if you use Fibonacci time, okay, down the bottom to the market top, we exactly has been reactivating at a 1.6, so a 61.8% extension on Fibonacci levels. So which means we've been consolidating 1.6 times longer than the trending wave. So definitely means that we're trending, which means we've been holding to a higher low, even though we've been spending 1.6 times the length it took us to rise up here. All right, so we're definitely rising faster and we're making higher lows. So this is signs of early trending and definitely what I'd like to see. So as I said, I'm just going to be straightforward with you guys in here. To me, it's all green. All the green lights, technicals, prices, momentum, cycles, we've got everything we need to rise. So just be aware that it still requires risk management as we're still early, very early trending. Therefore, it is absolutely not a one battle, not a one war. Just we're starting to win tiny battles one after another. All right. Next step to validate, which means for now, we're still having risks of pullbacks. Those who think we're just necessarily going to go straight line, can be just fucking proven wrong. We might be compressing prices in here, but the fact that we've been closing on top of 114 kind of makes me think that we're not going to go below that prices again. We're just going to oscillate in here, and God knows how long it will be needed to validate this. All I can tell is that, yes, 1.14 or 114 definitely is a support right now. We've got that bearish trend channel in here, so I would say maximum to rise again is 28th of February. And anything in between is just going to be for dumps to talk. All right? As long as we haven't been closing on top of 132 and breaking by daily candle close that bearish trend channel, it's just pure dumb talking. All right? All we need right now is to hold us on top of 114 and then manage to break this up. That's it for cryptocurrencies. Now we're going to have a look at the other asset classes, and first thing I'm going to have a look at is gold and silver falling, but that's great. Profit taken in here, so no longer in portfolio. I'm going to buy those shits again, definitely will, but just not right now. So we're going to have a quick look at these ones. In a daily chart perspective, what we have in here is definitely good. Weekly chart is a lower shadow candle, and we're starting to close below it. So definitely means the market is ranging in here. It's not bearish returning, bearish reversing. I think we're just going to digest for a few weeks before finding some bullishness again. So I think I'm going to just target the lower Fibonacci's retracement of that bullish impulse, and definitely probably just reactivate out of that trend. So I would say yes, definitely 1,200 or $1,290 and below is definitely the kind of area we'll probably reach out to in the next following days and weeks. And this is the price I will try to get myself to buy. So let's put an entry speculative area in here within the lure. So watch for daily or maybe a 4-hour signal in here. Remember, we need to trade in context. So in the daily chart, the context, the trend channel you have in here is the 4-hour context. Okay, so watch for 4-hour signals in context. It's no selling entry, god damn it, it's a buying entry. All right. So wait for this. The same thing goes obviously for silver. I'm just letting them consolidate for a bit before getting back to them. WTI definitely is going to be interesting pretty soon. It's hard to figure out what the hell is going to happen. Remember that in here we're trading a psychological pattern in which some bears have been trapped in here. So for now, anytime we're going to get to those prices, they will sell again. So we've got a strong resistance in here because of trapped people. But remember that normally in those price structures, it means we currently need to be patient and resilient, which means back then it was a buying signal, so we need to keep on buying this market. But in between, you can do both sides. So I tend to speculate bearish in here because we had some signals. It's hard to say how it's going to behave, but I think we can just oscillate in here. As I said, next support is in here. If we decide to go there earlier that week, then I'll definitely profit take. If we go a little bit higher, and that's probably to be expected, then I'll just let it go. So it's kind of a risk management to be done in between. I would say 4-hour chart time frame definitely do the job. As long as we remain in the bearish context in here, definitely a good signal to trade. We could try to go a little bit higher and break through context. So if we do, then be aware that this must not trigger your stop losses. So for now, remain low leverage, large stop losses, and if we go there, don't forget to partial profit take. At least I would say a 50% profit taking in there kind of makes sense out of this support area. We've got a technical cluster, we've got the sine wave target, Fibonacci support. So everything says if we're going in there, we're probably going to have a bullish reactivation. So therefore, you profit take, pay for your stop loss, and let it go with the rest of that position. Eurodollar and GBP USD, I think definitely are going to break in here as well. I think it's a 4-hour context to be traded in here as well. Anytime we've been trying to fuck this up, it didn't work out. So we're rejecting the bearish 4-hour, the bearish context in 4-hour, but we're still standing for the bullish support in 4-hour chart as well. So last time it's been working just well. I think we're just going to do the same thing. So I would say in terms of euro dollar, we're respecting the neutral range structure. We're trading 76% Fibonacci retracement, and we're in context. So I would like to have downward exposition, meaning breaking down the context, okay, getting in there, and any signal below the context with a triangle, with a confirmation triangle, and all this is really clearly set in the PDF manual. I pretty much gave you rules. Let me just give you a quick look at what it actually looks like. All right. Now, obviously, this is French, so don't be surprised. You're not going to be able to read anything in there. And as you can see, it's a pretty damn good thing. I mean, 45 pages, and I definitely. Oh, sorry about that. All right, so look at this, what I'm doing to you guys. It's kind of a process-making structure of all the decision-making you'll have to do with the pro strategy. So it's just something that you'll have in here, ready to print, and just basically to pin that thing right next to your screen. So anytime you're going to make a decision and you want to press a button according to the strategy, you need to be reviewing this thing. So in here is obviously what is the context. You got neutral ranges, trendy ranges, tendency, a trend, and excessive market and bubbles, with obviously all the informations you're going to need to in order to trade the range. You've got the conditions to get in, all the maturity steps. So it's definitely, I've been putting my ass out there. So I can't wait for you guys to have that. But anyway, once you have this, everything is clearly said that on this context, which definitely to me is a trending range, at least a neutral range, the conditions are to get at least below 61 and trade in context. So we could have some reactivation in here, but I tend to believe we still have to break down that low. So I would suggest buying below context, and this requires a confirmation triangle preceded by a signal. So what I would like to see in terms of price action from starting right now, something like that, going in there, showing some signal, and in here I want to have the confirmation triangle, and then I will buy this out. All right, so I'm just waiting. First I want to get down the context, breaking it down, then I'll put a second alert out of the confirmation triangle, and anytime the second alert will be triggered, I'll be bullish reinforcing my euro dollar. Obviously this is a range scenario, which means the stop loss is set below the previous low. If we go there, I'm obviously out, and if that happens, then definitely I'll buy the next context and the higher time frame. All right, GBP USD, exact same scenario. I don't nearly think we're going to go bearish in here and not even breaking the lows. I think we're just pull backing out of what we've done last week, just to gather some steam for the bulls to trend afterwards. So I definitely stay where I am, which means stop loss is set in there, and that's how it is. We go there, I'm out, but I'm basically protected by this trend channel. I put myself with a stop loss in here. If it goes wrong, I'll enter again in context, but I don't nearly think it's going to happen. The yen is kind of consolidating, so USD GPY, definitely I'm going to take a bearish entry in there. Same thing goes for NZD yen. I'm closely watching for any pullbacks on the yen pairs to reinforce. CAD yen definitely is going to be as well. Any pullback in those areas will be traded. In here, I'm waiting for this trend line to be tested and rejecting. So for now, I'm basically tiny but steadily waiting for retracement to trade this asset. Always searching for a time frame that shows a context. So I would say it's a 1 hour probably in here. Remember the call rule. So I would say anytime we get to at least 61%, and you can see we've got a sine wave target in here. So anytime we go to this area and on top of this, I suggest bearish signal near the context can be viable to do. Of course, requires signal. If we go there, trigger a signal with a candle close, I'll sell. If we don't trigger signal, I wait for the context. What else do we have to talk about? Yes, AUDNZD, kind of a sideways action still ongoing. If we have a look at the weekly chart in here and just delete all the information, what we have is anytime we get to this area, we're making lower shadow candles. So this very odd lower shadow earlier that year. lower shadow, lower shadow, lower shadow 3 times in a row after making upper shadow, upper shadow, upper shadow. So we're definitely ranging in there. So don't take a too strong bias in either ways, but I'll suggest definitely as we're working a strong long-term support, I still have decent odds for us to rise, but I still need a price confirmation. I wasn't ready to consider this being a viable traded pricing, but we can now consider being done, and this is definitely a lower shadow, and in that perspective, we're making higher lows, and I expect the market to try trending and making higher highs as well. Not necessarily going straight line up to the resistance, but just probably going testing this area seems to be what the most viable probabilities to come. So I'm waiting for prices to confirm that. If we have a look at the technicals, the momentum is still positive. We're still trading on top of that profit-taking structure that's been pretty fucking low. So I'm waiting for prices to profit from that bullish momentum, at least in the short run, which means in weekly we should have at least 2 to 3 weeks with a positive momentum. I really want to see those weeks breaking at least a few short-term resistances, especially the one we've been highlighting in the daily chart, which is in here. I really want to see those prices breaking down this area to confirm the fact that we have this bullish bias, slowly reversing the short-term bearish trends we have on those daily charts. But this thing remains a mess, so definitely be aware that this is hard to trade. This is purely ranging, volatile, hesitating, complex, and therefore if you're too aggressive, you are going to be down the corner just like I was. I took a stupid loss, definitely is the loss I didn't want to take, but I had to because I was too leveraged. So please don't do the same. Remain accordingly exposed to this market, which means you need to have a stop loss in there, and therefore any higher leverage is just too dangerous. Okay, so really patient, first validation breaking that level, but it is not going to be validated until we break this one, and until this break up happens, stop loss must be remaining in here. When we'll break this one up, then we'll be able to rise the stop loss and then putting some reinforcement. Just if you figure this out, okay, this is how I'm going to play, god damn it, this is how I'm going to play this scenario. Okay, whenever we'll break this, first validation, I would say, okay, that's good, but I'll probably do nothing. All right, then I'll wait for us to price this area in here, and I would like to see this broken up. So in here, what's going to happen is that this stop loss, I'm going to set it right here, which means I'll have free cash available to reinvest the risk. So this is where I'll start putting my first reinforcement in AUDNZD. All right? So for now, patience and rigorous application of the strategy. In terms of stocks themselves, I'm just going to note Xiaomi, who's reactivating earlier that week, but doesn't mean it's a one battle. We're still bearish trending in the daily charts, which means the trend channel is still bearish, and we're just starting to neutralize that as we're trying to get into the resistance area of that trend. So we're testing the bearish resilience in here. So far, it's pretty hard to say how it's going to happen. All I would say is that it's still highly speculative. We can go a little bit lower, so if you bought, just be aware that going in there just makes sense, and you need to be ready for it. So no stop loss too close for the current prices, and just wait for this game to play. If we manage to retrace up to the bearish trend channel, then that means we neutralize the trend, and that's going to be a good sign. But anything in between just needs to remain highly speculative. So low leverage or buy and hold, but you remain truly exposed. Sorry about that. So just to sum up informations, patiently waiting in here, still speculative leverage, highest level of uncertainty, but I definitely think this can bring a gain in the future. The low risk trade is going to be this one, so those who have low risk profile still requires a little bit more patience. Just let it go. It's just for speculators to try figuring out that rebounds and try figuring out the bottom area. This is where the low risk trade will be after we pull back into the DOM area, the DOM zone, and then normally we should go back one more time in the blue area, in which you can load up with low risk entries and definitely a stop loss this time to be set at the market prices. So in here we're just trying to get the bottom trying to reach out for a bottom, highly speculative. Obviously the trades may be turning negative for a little while, but normally it should bring a gain with decent risk management. So just as a reminder, my speculative entry is in here, so I've done a pretty nasty job so far. And if we go lower, I'll definitely put an additional amount of buying entry, but tiny leverage, just to lower my average entry price. But even though I've been buying in here, I still tend to believe I'm going to take a gain out of this. It's just as long as the position sizing is done with a decent amount of risk taking and risk management, I don't even give a shit having a position that is going to be negative 98% of its lifetime. I mean, I've got in here pretty much, I've been negative on this trade all along the way, and I still expect that going in there is just going to take 2 to 3 days to go positive from profit taking. So I don't give a shit. All I care is taking a gain, and it's just not taking too much risk in between. So far, this risk is big. I mean, yes, I definitely have a negative ratio. Oh yes, we're gonna have to talk about that. So, because some people may just not gonna get to this. So I still expect that going in there is gonna be a profit take for that trade, which means regarding what has been holding so far, I've been negatively trading, which means I'm having a 0.45 risk-reward ratio, which is damn less than my usual standards, but at some points I accept doing this, but you know how this Xiaomi thing has been traded. First of all, I have a pretty decent amount of information suggesting this thing will pretty fucking rise in the future, as they have a lot of profits to make out of Apple's falling. But definitely not just about just Apple. I mean, this thing is producing stuff in so many sectors. I mean, they're making vacuum machines. So yes, definitely Xiaomi, I think, is one of the most interesting companies to own in China for the next decade. Not necessarily just right now, as I'm trying to find a ground basis for that value. But anyway, for the speculative trades, definitely a bad speculative process in here, as I turned out to be negatively ratio trading, which I rarely do. But I still tend to believe that we're searching for a ground valuation in here, and anytime we find out, definitely going to rise again to some positive prices. But anyway, the trade I really will put a lot more conviction into, and probably a lot more leverage. I really have been low leverage trading in here, but the next trade definitely is going to have a much better risk-reward ratio, because we'll be able to put a stop loss at the market below the low we're currently building, or we'll build a little bit afterwards. And then we'll have a pretty much better risk-reward ratio. It's going to be a 1-to-3 or 1-to-4 as we'll reach. As usual, first profit take is going to make 61% retracement. Second one is going to be 76. So it's definitely a much more interesting 1-to-3 to 1-to-4 risk-reward ratio the next time. All right. So that aside, all we'll have to talk about is Electronic Arts and Boeing. As you can see, the color code suggests I'm closely watching to those two to get them into the portfolio, definitely for selling entries as well. I'm basically selling everything in the US, but just not right now, and just a few stocks. Okay, so in here we've got a pretty messy situation, 12% downward move after the earnings release, pretty disappointing earnings, and pretty decent, pretty nasty expectations for the next quarter. So you can very well expect that the next time we're going to publish, so 7th of May, you can expect the market to be bearishly trading at least close to those prices, not to say even lower. So it's a long run to see, and a lot of things can happen. So very high level of risk, okay? Low risk profile, definitely must not take that kind of trade. Only high level of risk taking and professionals in here, experimental trader at least. So I'll trade this first speculative area because we have sine wave target in here, 38% Fibonacci retracement. I'll try to search for a signal in there. Obviously no signal, no trade. But I think we could just do a final bearish wave in here for some reason. So if it doesn't play, and I'm going to tiny leverage in here because the stop loss will remain in there. Okay, I'm going to put a stop loss in there. So just having a look at how big this stop loss is. It is a 35% move on the asset for a stop loss. I'm not going to lose more than 2% in here in that scenario, so you can definitely say it's going to be a minimum leverage in here, just tasting the water's temperature. If it reacts great, I'm going to profit take, and just that's it, all right? But I'm pretty much aware that we might just risk a dead cat bounce structure. This is definitely the kind of market that has been bubblish trading. You can definitely see the parabolic scheme pricing in here, so falling like a knife. So it's either we got one more drop to make, just chasing stop losses below that low and our profit take, and it's can be done in that area. If it doesn't, if it crosses on top of this area, then this is dead cat bounce structure, in which we generally go ABC structure, and then I'll sell this area with a lot better risk management, probably bigger position sizing ahead of the next quarter's earnings release. And definitely if we go there, it's a dead cat bounce. You definitely sell that stuff. It's a bubble, it's crashing. We've got all the step, just as Bitcoin back in the 17,000 area. It's the exact same thing. We'll pull backing, everybody will think we're going to make historical highs, that the stuff have been purged, that we have decent V bottom structure to buy. Fuck that, sell and wait for this to shape the bearish retracement. We generally retrace to the earlier stages of stupid trending, so you can expect prices to go at least there, not to say probably just 45 or even lower than that. So out of those prices, it's going to be a 50 to 70% drop in prices, and you definitely want to be on this bearish side, just like you should have been back then in Bitcoin, instead of buying that shit when it was stupidly high priced. Same thing goes for Boeing. You must remember this one, because obviously it's been ended up with a stop loss the last time I've been trading, but I was aware of the high level of risk I was taking. Just to sum up those informations, last time that's been done on Boeing, it's been trading near this area when we had the divergent structure at the trend channel. So what I tried is to set up for a bearish trend attempt. So I tried ahead of the earnings release to anticipate negative earnings release, and then we would have probably trended to the downside with gaps, and obviously those who haven't anticipated would have been fooled. All right, sorry about that. So yes, the trending attempt has basically been failing hard, as the earnings release weren't disappointing. They were pretty good actually, so not really the euphoric kind of release, but good enough to gap up and hold this gap. But as you can see, just right after the gap, we didn't manage to rise like hell. It's just like we've been hesitating and then chasing stop loss, because we clearly have identified this technical area right after. And as I said, I'm taking the stop loss out just because anyway, we're going to make historical highs afterwards, but I'm going to have a quick look at how the prices will react in those historical highs. And definitely what happened at the close on Friday kind of gathered a lot of interest from my strategy, because definitely, as you can see, is a price okay with momentum and sine wave okay. So it is kind of a trading signal in here. Just need to be reviewed. As usual, you just don't trade when you got those three signals. You just have to review, contextualize the trade, and see if it actually worth an entry. And then you're going to set the risk management according to those informations. So first of all, yes, definitely something can be done out here, but the problem is, do you see a confirmation triangle? I mean, those red triangles, nothing so far, because what we've done in here is not the kind of candle that triggers the triangle, for a simple fucking reason. Look at how that candle closed. It's been gapping down below the previous day low, lower shadowing, and then closing at the highs back into the previous candle's body, or less than high-low ratio. And that doesn't mean, it is not the kind of bearish candle. So you don't want to sell just this like instantly. We probably just found an underlying support after finding a resistance. So I would say this doji in here, resistance, this candle, support out of the previous gap. Anything in between, range activity. Profit taken in here, great. It's going to help us understanding the fact that we have decent odds for the price to stop moving higher, at least in a short run, which means you can low risk trade in the lower time frames with bearish entries. But be aware that what we're trading in terms of context is this. And this is a fucking overextended market. So it's excessive trading. Not to say it's bubblish, because we're accelerating with a freaking parabolic pace. And you know that bubbles and excessive market are the same ways of trading, meaning all the beginners just don't give a shit about that. You don't even trade those things. You just get the hell out. Everybody's going to talk about that, but you don't give a shit. It's too dangerous for a beginner to get into this. It's a psychological pattern that requires a lot of experience. So only experimenter traders, 3 years of trading and more at least, and professional traders only. Everyone else, just get the hell out and don't do this. Because you might have to come across that scenario a few times and be proven wrong a few times before getting right, and it's dangerous to get yourselves down to this when you're not yet prepared for that. So what we have in here is that if this is a bubble, then this is what we call the volatile reactivation, which means market is surging, absolutely no sellers, and then buyer-sellers battle, buyers take it out one more time for a final burst, stupid burst in which prices rise fastly without sellers once again, but this time it's overextended pricing, stupid pricing, and obviously we're going to have a speculative collapse right after. Just like the Bitcoins. It's basically, if we do this, it's the same as Bitcoin back then. Just have a look at that, okay? Gone in here, speculative return in here, some strong pullbacks, and then the market collapses. So this is exactly what we could be doing, not in the same stupid extension, obviously, but still something valuably violent in here. I mean, last time we've built the support, it's $130, and we're trading 400. So definitely the kind of pricings that can fuck up 70% of the valuation without a single problem. So second option, we can terminate, because this actually, when we've got the volatility return, generally the market makes an ABC correction. So it does something like that and then goes up again, range, and bam, fucks you up again for the final bullish move, and then the market collapses, okay? So generally that's how it goes. When the volatility returns, we've got few swings, very violent, very brutal, generally minus 30% in here. Okay, so we're oscillating minus 30, then we're neutralizing, concentrating volatility, and then bursting to the upside. In here is a pretty different thing. We've been concentrating volatility first and then expanding this with an expanding diagonal structure, which means instead of sideways and contraction, which hesitation leads to new bullishness, what we have instead in here is the opposite. We started with hesitation and we brought volatility, which means, oh, this is the last thing you would do. It doesn't fit the plan of a volatile return. It could fit if we just keep on going straight line in here, but the fact that we're hesitating, that we're showing profit taking structure in the daily chart, damn really worries me in the fact that in the nearby area, some nasty things could be played. Okay, if the bulls are exiting in here, meaning they don't follow through with that bullish exhaustion move in a bubble structure, then if the bulls are surrendering in here, then this is already game over, and this will be the termination structure. This is what we call ending diagonal, expanding ending diagonal structures. Very rare, but they happen. And when these things happen, we generally reverse, and we reverse for a freaking long time, which means Boeing can be bearish for at least 2 to 3 years afterwards, not to say even more, because this is obviously going to collapse, which means speculative bursting, just like we had on General Electrics. I mean, remember this one? It's definitely the kind of lesson you need to take out of this. This is what happened back then. Whoa, god damn it, stupid speculative trading, and then collapsing, and we never ever retraced down to the 2000 highs. So no matter how bullish this sector could look like right now, I mean, it means like for now, if you look at the investor, at the analyst, it's basically like the plain sector, or let's say I don't know how you guys call that in English, but let's basically call that sector and say it's definitely the growth sector. I mean, fuck that, how stupid that is. Definitely, yes, it could be, but if there is still a lot of growth to make out there, then anyway, it's not the thing you want to just buy eyes closed without risk management, because it's very dangerous pricing and it could very well collapse. But if you have a look at this, look at just how it's been playing for General Electric back then. Regarding the overextended thing, we could just be there today. Overextended, volatility return, and if we're just here, right now, in terms of Boeing, then look at how fucking high we can go afterwards. So definitely why I teach you guys, if you're a beginner, just don't get your ass in here, because it's going to be dangerous. And if you're holding that trade with a negative return, I mean, if you're selling and holding, God knows what can happen to you. I mean, prices basically tripled and more than tripled afterwards. Can you handle such thing? Obviously no. So don't play that dumb. If you're a beginner, really get the hell out of here and don't take a trade on Boeing. But taking profit structure, ranging context. So if we are failing in here, definitely the kind of trades I want to take. So what I'm going to be doing on the week ahead is having a look at the 1 hour chart time frame, and I'm going to try some speculative entries in the taking profit range, which means large stop loss, and I'm ready to take it if I'm going to be proven wrong. But any bearish signal, I want to see the range. So I'm not going to bearishly actively trade in here. I'm just going to wait for a market top to build itself. And then I'm going to try seeing if the market retraces down to the context in here. If it does, then next swing is going to be a selling entry to me. All right. So I'm not selling in here too aggressive, and we're trading a bubble. I don't want to be a kind of market that just rise like that. But if we kind of make a new lower low, I mean, if we just slip below that low, just a little bit will be enough. Then I'll start selling low leverage, highly speculative, large stop loss, really patient, and just going to try to see if the bulls are losing strength in here, and if we're breaking some support afterwards, then I'll get validating that trade. And if it happens, then it's a straight line down the bottom of that structure, and we're going to break it. Just to set things straight, we're not going to have a strong support out of the fourth context in that bearish trend line. This time we're going to fuck it up, break through this, probably searching for first profit taking down this support, then retracing, pull backing to this area, and then probably selling again in 3 bearish waves. First one is definitely going to be extended, because that's always like that when we have expanding and in diagonal like that. All right. That's it for stocks. Now we get to talk about the damn Eurobonds. So I obviously I intentionally didn't say that earlier last week, but I got fully leveraged just before the weekly close. So it's basically 5 minutes before the market close, I got leverage 5 into Eurobonds. I'm just going to unveil this, but I didn't want you guys to follow me in here. So once again, I've been hiding some informations, but for your own safety. But to be honest, this is what I think about the bonds. Big range, big trap. We're stupidly trading areas that I don't think will nearly going to be holded, because in here it's a binary choice. Either we start trending like shit and it's going to be a straight line right to this target, which absolutely makes no sense to me, but we could do. I mean, I'm not managing to be absolutely right. All I can tell is that if we're going in there for bad reasons, then the reversal is definitely going to be brutal, just like it's been every time we've gone in there. Last time we've been holding this is the time we've been holding negative return out of bonds, but it really is a conjunctural effect, which means back then we had QE at its best, and we had very few bonds emission by the German governments, which means very low demand and extended amount of offer. So definitely the market pricing has been stupid back then because of those two effects combined. Now we don't have that. ECB isn't buying anymore, and moreover, we've got the fucking German economy nearing recession trade. So what the fuck are we doing in here? We shouldn't be trading negative yields, more like 1%. Not to say we should have a higher yield in the Germany right now that we do have in France. It's just that for some reasons the bond traders are still trading the old same way until the toy is broken, which I think is definitely going to happen pretty soon. Because regarding the economy's shape right now, the growth degradation we may have more growth in the forthcoming quarters in France than in Germany. So why the fuck do we have 0.65 yielding in France and nearly 0 in Germany? It doesn't make sense, which means we have a distortion, and generally distortions doesn't end well. So we have a timing to play. Doesn't say it's going. I'm not saying it's going to happen just right now. All I'm saying is that this is how I've been playing that scenario. Okay. We've got expiration, which means anyway with the bonds we need to play with those expiration. Okay, it's a gamble. It's a game that you have to play by the rules. So each and every 3 months you get an expiration. Next one is the 7th of March. And I very well expect that we're not going to close this one with a positive reward out of the futures contract. We've been opening in here. We definitely at least closing here or closing lower. So I expect the reversal, if it happens, to be damn brutal. All right, so what we have in here, very strong resistance level, definitely the last level I'm ready to trade. If we're breaking this to the upside, I'm out, pure and simply, and I just don't give a shit about this market. But I just think we're going to do just like we've done any time back then, strong reversal. We got in here, bearish engulfing the week right after. Got in here, bearish engulfing. Got in here, bearish engulfing. Tried one more time, bearish engulfing. So anytime we've been trying to fuck up this area, never ended well. I think this time we're very fucking mature, which means look out. Ranging, bursting through context. This is not the thing that happened in a consolidation. So what we're having here kind of make me believe that we've done, I mean, just count down the bottoms. First bottom, so let's just check this. So first bottom, second bottom, third bottom. So 3 lows, okay? This doesn't fit the consolidation scenario, okay? Because we should have an even numbers of bottoms in that structure. So it leads me to believe that even though this really looks like a range, really actually is what we call a leading diagonal. And in that perspective, wave 2 can be deeply retracing, but normally doesn't break the original high. So as long as we hold that right, and that there is definitely a fucking stop loss to my scenario in here. We go there, I'm out, pure and simply. I'm going to take a huge loss because I'm leveraged 5 right now, with an average entry price of sorry about that. So average entry price is right here. Basically, I've been dipping it early at the early tradings of that new expiration. Took a tiny entry in here. Been waiting all along for validation that never showed up. And now I'm loading a lot, which means I've been taking 1.5 leverage in here. Now I'm fully leveraged level 5 with an average entry price in here. Of course, been rising that price, which means the stop loss basically costs me, fuck that. All right, stop loss is this. I'm reinvesting all my previous gains as well, so I'm taking high level of risk, which means in here the maximum loss, and to be honest, I'm not going to stop loss in here, so I'm just stop lossing if we go there. So I'm taking a 6% risk, reinvesting part of my gains plus a speculative leverage in here. We'll see how it goes, obviously, if it goes right. And if we go there to terminate this, I'm taking 10% gain just right on this expiration, and you can be damn sure that I'm going to reinvest them for further gains afterwards. The range is pretty fucking mature. If we're selling in there, we're definitely breaking those lows. And I think next stop is in here. So this is the scenario you know about. Just to be setting things really straight in here, some asset managers still tend to believe that all the fundamentals just play for the BUND to go negative. All right, they really think it that way. I think that's as stupid as it could ever be, and I'm not the only one thinking this. Just to set things really straight, all the big names like Commerzbank are really a big forex, big forex bank. Goldman Sachs, they're all betting to the downside just like I do. So I tend to believe that, I mean, it's just a risk management to do, but historically speaking, I very well like to be among the Goldman Sachs side rather than the opposite. So future will tell. Doesn't mean that I'm just going to trade because Goldman said they do as well. It's just that having Goldman in my side kind of makes me believing that if I do manage my risk accordingly, I think everything is just going to be fine. So waiting for this to confirm, it still means it's speculative. I'm highest level of speculation I could do. I'm not going to do more than that. And if the loss shows up, I'm obviously going to take that pure and simply. But obviously if it triggers, I'm going to take a nice gain on the opposite side. That's definitely what I expect. So VIX is still working around the support area, kind of sideways action. We don't give a shit about that. But let's see if that week is managing to retrace up to previous week's high and breaking them or not. That's the only level of uncertainty I have for that week ahead. Either we're going to go there and show some positive reaction on VIX, or we just stay there, fuck that, and go to making slightly new lows. Remember that this is a 5-way structure typically, so 1, 2, 3, 4, and we could just go trying to make 14.6. All right, so VIX can still try to make tiny lower lows in a weekly basis, which leads me to believe that indices may just behave not that bad. So German indices may just trying to digest. This is typically a wave 1 bearish impulse, so we may have 2 sets of waves to consolidate for the week ahead, a couple weeks ahead of consolidation, probably testing that trend line that everybody has been seeing so far. So I bet we could retrace up to this trend line, so nearly erasing the entire bearish move, not making new highs, but retracing deeply, finding some new bearish entries and see how it behaves. But I still tend to believe consolidation on indices, on stock market, is probably what may happen in the next few weeks. So we had some bearish overexcitement last week because it's been going down, but it was previously expected to do so. So we just gotten down to support areas, slowly just rapidly breaking through them. But we strongly reactivated last week at the end of the sessions. I mean, the SPX has been rising at the end of the session just to make a lower shadow candle out of the futures market, and even managing to close at the highs. So be really cautious about the US. They can very well make higher highs, so if you're having placing your stop losses in there, oh gosh, this is definitely not fitting the plan. Just we're trading divergent structure, which means divergence first need to be validated by coming back to the underlying support. So underlying support is there. As long as we don't go there, this divergence remains potential, which means very dangerous to consider this as a one battle. For now, you can't be aggressive with your stop losses. It needs to be put in further away, and I still tend to believe that those stop losses must remain in that area. Here at least, here at best, and this is where mines are, and I still patiently and cautiously trade this area because of that. I think we're just going to oscillate in here. We got 61% daily retracement in here, and definitely I think the price is just going to oscillate in this area with the potential of reaching eventually up to 76%, which I really doubt we could do, but we can just die in here in between. And there is another element you really need to focus on, is that you need to put this in your charts 1st of March, okay? Pure and simply, vertical. So pure and simply because in here is the actual timing. We'll have the meeting between President Xi and President Trump, and anything in between is going to be pure speculation about what's going to be said and done out of that meeting. Obviously, we're going to be news flow impacted, which means someday some government officials will just talk saying something great is expected, but few days after you must have something like threat of new tariffs or whatever shit this is. So it's definitely going to be a news flow balanced trading, which is the worst case scenario to be fully exposed, leverage or anything like that. So remain low leverage, be aware that it's going to be trappy, it's going to be news flow driven, which is really bad for traders who do that not the right way. So patiently waiting, please have a mindset in here, be patient because it's going to be required. Once again, in that context, which is psychological context, distortion kind of context, your actual need of behavior are going to be patience and resilience, which means you don't switch, you don't ever change your mind to be bullish again, you're just going to remain bearish as long as necessary, but patiently bearish, cautiously bearish, speculatively bearish until we get to confirm this thing. And obviously with a risk management, which means if we go in here, you just get the hell out and let the bulls run to historical highs. Don't buy, okay, we go there, we just get the hell out, don't reverse, let the bulls play some stupid pricings, and we're just going to get ourselves back in that market again after they exhaust themselves into historical highs. All right, be aware of the multiple options through that scenario. We're trading a decision cluster in here, speculative cluster. We have signals fitting the plan. You definitely need to trade. We've got a triple fucking signal in here. Definitely is something you want to be bearish exposed to, because if it shows up, you just don't want to catch up with falling knives. You just want to anticipate and reinforce steadily but safely in the bearish market if it shows up. That's pretty much it for today. And for the week ahead. So I'm closely watching at this. So I don't expect anything interesting in terms of stock market this week ahead, just some retracement in sideways action. So don't get yourselves in there. We're not going to make intraday scenarios on the week ahead because of this. It's going to be too trappy, and any scenario in here can be fucked up by any unexpected news from the government of each side or anything like that. So I think with that unexpected news flow that can show up at any time. Intraday trading is too dangerous, so just don't do it. So I'll let it go with the trades on the yens and things like that. I think forex can be interesting this week. Indices won't be, and some stocks, individual stocks, can show up, can show some interest in the forthcoming days. That being said, I'm going to leave you guys with that and finishing talking about gold and silver. Don't remember if we did. I think we did. So yes, gold, I'm just letting it go to consolidate a bit. I think it's going to come along with the retracements on the euro area and US sectors, and we could just pull back to those supports, trend channel, and I think we're going to buy in here in the 4-hour context, which is going to be, remember that the daily chart support, the daily chart trend channel is the 4-hour chart context. So I'll always trade in context, and it's definitely in the 4-hour chart that I think we can find some support in here. So just let it go. The timing is still not appropriated. Wish you a good week.